started. Unfortunately, just like the stock market, we don't control the weather either. So thank you all for bearing through it and coming out and being a part of this today. We're excited. We're going to make a couple announcements today that's to do with Capital A for 2025, and then we'll introduce you to Tom Siomades, who is the Chief Investment Officer at our partner firm, AE Wealth Management. We'll pass the baton to him. Tom, we're opening up for Q&A at the end. Cool, so we'll open up for Q&A, pass the microphones around if you guys need them, and we'll get going.
I just wanted to add that Tom knows exactly where the market's going to go this year, so if you guys want to know. Right, Tom?
No question. So what's new with Capital A in 2025? We're going to start with our dad. So our dad, I know we sent an email out about a month ago. Some of you know, some of you don't, but our dad has been diagnosed with B-cell lymphoma. Treatments are underway, and he's doing really well. He had a little setback last week. He was in the hospital for a week, but what came out of that is we found out that the chemo is working and the cancer cells are shrinking. So Dad's in a really good place right now. Thank you. We wish he could be here, and he wants to be here too, but hopefully by April we'll have him back around. And in the meantime, we're all here to support you, and we appreciate you guys allowing that to happen. And thank you to our team for helping facilitate that. I'll do the tax solutions last. So guys, we're moving. We're moving back down to the 4th floor. For those who've been with us for a while, we're going back down to the 4th floor. We've continued to expand our team and our operation, so we needed more space. Supposed to be done in February. We're hoping we'll be there, but if you guys come see us in March or beyond, we'll be back down on the 4th floor in a new office space. So we're excited about that. We're also launching new content platforms. So Dominique and Jacqueline will be running this for us. We're going to be providing you with content on different channels. Our podcast is coming back. We're going to also be running a YouTube channel. We're going to try to do these every 2 weeks and have them out to everybody just so we can kind of keep you updated on things that are happening. You want to introduce tax solutions?
Yeah, so recently, and this was with our year-end survey that we sent out to our clients, we really look at that. And so a lot of people said, hey, we would really like a tax solutions arm to Capital A. We all do a lot of Roth conversions. We talk tax planning a lot, but we wanted to make that more efficient and, better for our clients moving forward. So what we did is we hired 2 CPAs, Brett and Brett, so Brett squared. So it'll be a little confusing when you call the office, but just ask for Brett. And so, a lot of our clients were selling investment properties, selling highly appreciated securities, just different things and they had a lot of questions for us when it came to the tax side of things. So we're really excited about this. They will also help you prep your taxes for the year. And so we're going to bring Brett up to talk a little bit more about this. But if you do have any questions, we do have 2 CPAs on staff now. So, Brett?
I'm just going to start by forewarning you guys. I am a CPA, so I might get boring up here. I don't want to put you guys to sleep at all. At Capital A Tax Solutions, we're going to work hand in hand with the Capital A team and try to meet all your guys' needs, whatever it may be for the tax side. As you can see up here, we're going to offer a bunch of services. The main one I wanted to dive into is the individual tax preparation. We know all your situations are different. Like I said before, we're going to work hand in hand with each advisor, whatever advisor you deal with, and try to make your situation as best as we can. That's all I really had to say today. I just wanted to introduce the company. So I'm going to hand it back to Brandon and Dave. If you guys have any questions, feel free to come to Brett and I.
Thank you, Brett. Yeah, guys, we're excited about that. They'll be able to help support Roth conversions, obviously the filing, everything there. So before I pass this to our guest speaker, Tom Siomades, today, I wanted to go through a little background on Tom. So Tom is the chief market economist at AE Wealth Management, our partner firm, and he's coming in from Topeka, Kansas today. So we thank you for being here, Tom. Tom has over 35 years of experience in portfolio management, and most of them are in complex, well, his specialty is kind of taking complex investment topics and making them really relatable. Professional journey, Tom joined AE Wealth in 2019 as the Chief Investment Officer, and he works with independent advisors all over the country to help clients achieve their financial goals. So Tom's behind a lot of the portfolios that we use every day for each and every one of you. Tom previously served as an infantry officer in the U.S. Army, and that's after he graduated from West Point. And Tom also has 2 children, and his son is currently at West Point Junior, right, Tom? Son's a junior at West Point right now, and his daughter's at Penn State, so Tom was not too happy on Thursday. With that being said, I'll pass it off to Tom. We'll pass it off to Tom.
I've got a mic on. Can everybody hear me okay? So they double wired me. I don't know whether if I start going off of script, they're gonna zap me. So if I start glitching out on you, just so you know. So thank you for the kind introduction. Thank you for having me out. Thanks everybody for coming out. Great to hear about Dave Sr. We wish him the best. Do we have any service folks, ex-military out there? Veterans? Thank you for your service. Appreciate it. So, real quick, just to round out, people want to know things about me. I don't live in Topeka. I live in, people that know the Kansas City area, I live in Leawood, which is just outside of Kansas City, Missouri on the Kansas side. I have a 12-year-old dog with 5 teeth. I have a 17-year-old cat that still, it's amazing, think about it. If it's 17 years old, right, for a cat, what would that be for like a human, like 90-something, right? This thing still can jump like from a dead sit, like 6 feet in the air. Could you imagine if you could see like a 90-year-old man like leap like up to the ceiling? That'd be awesome. And then we also have a lizard that my son left me, and the thing just won't die. It doesn't do anything. Every once in a while we throw some food in it, and it just sits there and just like looks at you and blinks. And I can't imagine what kind of life that must be, but there you have it. I've been married for almost 40 years. Best decision I ever made. My wife's my best friend. We're buddies. It's for those of you that have been married a long time, you realize that it's probably one of the most significant things that you can do, right? I mean, it takes a lot of work, but it's so rewarding, right, to know that you got someone walking by you alongside of you. So anyway, that's enough about me. Let's talk about, first of all, before we talk about 2025, let's talk about how we kind of got here, right? Because 2024 was a strange year, right? They all seem to be strange lately if you think about it, right? We started off the year, people were talking about interest rate cuts, and we were talking about how, there might be a recession, and then there was going to be an election, and there was going to be turmoil from that, blah, 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 right? So it was, everybody was getting all worried and getting all stoked up. And in reality, last year turned out to be a pretty good year. If you guys thought about it and were patient and didn't flip out every time somebody ran the red flag up, we did all right. In fact, last year and the year before combined were the best 2 years for the stock market since 1998. We had 57 record closes. And I'll loop back to that in a few minutes when I'm talking about what the media and other people try to do to get you all stressed out. But think about it, 57 record highs. I mean, there's only about 200 some odd trading days during the year. So that means once a week you were averaging a record close. What kind of drove the markets last year? Well, I think the election showed a lot that people just weren't genuinely happy with what was going on, despite the fact that we were being told that, the economy is great, employment is great, eggs don't cost $6, a dozen, or whatever other things that we were being told. It just wasn't happening. But yet the numbers were still good, right? GDP was still strong. So it was kind of hard to say, yeah, I know you're full of it because GDP is bad. But the reason GDP continued to be strong last year is because the government spends a boatload of money. We know that because there's, the deficits are ridiculous. We've got $36 trillion in debt. They're not spending as much as they did during the coronavirus, and it's coming down. We don't have 2024 numbers yet, but they're still spending. If you look at that red line, they're spending at an accelerated rate, way above historical norms. So that needs to come down, right? Because it's not, in my opinion, it's not money that's being used efficiently. Nobody, in my opinion, knows what to do with their money better than I do, right? Or you do, right? I don't need some bureaucrat somewhere in Washington telling me how to spend my money, but you've got people that are entrenched that like borrowing money, on us having to sign the check for it, and our grandkids and our kids are going to be on the hook for it. The interesting thing about it is at some point in time it's not sustainable because the government doesn't really create anything. They're a user of capital, they're not a creator of capital. But it will not be fair to just blame everything on the government. I mean, it's easy to do that, it's an easy out, but we've done some things ourselves, right? So first of all, we got a whole bunch of money given to us as stimulus. We had record savings, and then we spent. Like if folks remember when we were holed up and locked up, remember the days where people were hoarding toilet paper? Who still has toilet paper? I still have toilet paper. It was funny, remember last fall when they were talking about the dock strike and like Mercedes-Benz parts weren't gonna come in, or French wine or whatever? My wife went to Costco and she's like, they're out of toilet paper. I'm like, who's importing toilet paper? But yet, that's kind of where we go, right? So anyway, so we bought everything that you could possibly buy, right? My Amazon driver was probably at the house, every single day, if not multiple times a day. We got to know him by name. I'm surprised we didn't invite him in for dinner. He was coming over so often. But we bought a ton of stuff. And then once we got out of our little caves, we wanted to start spending money and experiencing things. People that never thought about going anywhere on vacation, like my parents were these kind of people that, they never went, what do you need vacation for? You got a bed to sleep in, don't worry about it. Those same type of people all of a sudden, needed to get out because they were locked up for a whopping, 6 months or a year, okay? So we started spending on experiences. Has anyone been to, on a hotel, or restaurants are always crowded, planes are always crowded, you see it all the time, right? But yet the funny thing that also happened, again, this is part of my cynical, my snarkiness that comes out, it's like, it also gave him an excuse to give you crappy service. So you're paying more now for a hotel room than you ever have probably in your life, but they don't clean your room anymore, right? You get crappy service at the airline, you open your mouth, the minute you start saying something, security threat, get them off, right? So, it's like the coronavirus gave everybody some sort of an excuse to be, an a-hole, right? And it's unfortunate, but that's kind of where we are, and people are putting up with it, but we're still spending on experiences. And I'm like, if you're gonna get treated like crap when you go out, like what kind of experience is that? But people are doing it. So we didn't really change the way we behaved, right? Because we had all this money we got from the government, and we went out and we spent it. And we spent actually more than we had actually saved. Are folks familiar with something called the multiplier effect? Well, our good friend Nancy Pelosi came up with that. She basically said if you give somebody $1 in food stamps, they're going to spend $1.79, right? So where do you think that 79 cents comes from? Out of your savings, right? Or whatever excess money you have. So we didn't change the way we spent, and a lot of people that blew through their savings, then they started relying on credit cards. And just as what happened when credit cards balances started shooting through the roof. Hey, I'm kind of loud. Somebody needs to turn me down here. Maybe it's got a mood thing in it when I get all hot under the collar, right? Anyway, is it echoing too much for people? You guys hear me okay? I'll deal with it. But what's interesting is we also hit this point where we had inflation, right? Transitory, they called it. You got 400 people at the Federal Reserve, 400 people, PhDs, economists, geniuses. You're going to tell me that anything that a 4-year-old can figure out, that if I give you money, you're going to go spend it. Guess what? Prices are going to go up because there's not enough stuff, because it's all being stuck on ships out in the ocean somewhere, right? But yet we continue to spend, and then we got inflation, and what happened to inflation? We needed to tamp down inflation, and people borrowed money on their credit cards, and when their egregious balances were all of a sudden now, I think balances were, the average on a credit card was something like 16% interest rate. Now it's like 23. So at the absolute worst time, we've accumulated, most people, not in here, most of you guys are pretty responsible with credit, but I'm talking about young people. We've accumulated a ton of money, and that's why they're complaining. They want their experiences, but they're paying through the nose for it, and then they complain that they can't afford a house. So part of my PSA, right, is, again, we talked about it's not just the government, but it's also us, right? And the way I look at it is, we can complain about the government all we want. It's our God-given right as Americans. We have a right to complain, right? But the fact of it is, just complaining about the government isn't going to fix it, right? How many people offhand know what the approval rating of Congress is? Like 12%, right? But yet, if you talk to people and you ask them, what about your congressman? Oh, I love him, I love her, they're great. So it's kind of a disconnect, right? So people love to complain as a collective about the government spending too much, or the Biden administration, or this, that, and the other, but they never connected back to say, well, my congressman is part of that, right? I like him. Well, if he's such a nice guy, then call him nicely and tell him to stop wasting money. Tell him to stop voting for stuff that hurts us fiscally and puts our economy and our nation in financial jeopardy. We also have an addiction to debt, right? We're an extremely consumeristic society. I just made up a word, right? Consumeristic society. And it's like, hey, everyone's got to live within their means, and if we expect the government to do it, we should as well, right? And running up your credit card balances, young people, is not a good thing. So again, that's all part and parcel of demanding better and setting an example. All of this is not irreversible, right? If we can show that we can, temper our spending and our behavior and impart that to our, here's a novel idea, public servants. Guess what public servants are supposed to do? They're supposed to serve the public, right? So if we can pass that on to these people, I think we could be in a better place and get things done. Not necessarily by just slashing to the bone and going like austerity like they did in Europe, but more along the lines of, hey, let's stop wasteful spending, right? And let's start putting money into things that actually grow our economy, enhance people's lives, and hopefully by just keeping the debt monster on a short chain, we can grow ourselves out of it. Again, there's morality that needs to be considered. Everyone knows it's funny, but it's becoming less and less fashionable. I'm finding less and less people that actually understand the difference between right from wrong. We all grew up with it. We had an internal compass that said, you know what, I shouldn't do that. Now it's like off the table, right? People are doing silly things, and I think we need to come back to that. And I'm not talking about dressing up like the Puritans and, praying 8 times a day. I'm not talking about that kind of stuff, but we all know right from wrong, and we shouldn't be afraid to call people out when they're doing wrong. So we worry. People worry. Everybody worries. I was talking to a lady the other night. She was a nurse. She says, I'm a trained warrior. I'm like, well, I can't stop you from worrying, but I can tell you realistically that there is something to worry about or there isn't something to worry about. What we do is, and this might be really faint, but can you guys see the little red dot right there? We worry about this right here. We wake up and we worry about the stock market going down 20 to 40%. But if you look at that period, right, it's nearly 75 years, if not more. That's only happened 4 times in 75 years. Crazy, right? But yet we worry about that every year. And I was talking about, we started off 2024, talking about reviewing 2024. And we were talking about how, people were all concerned. All of those concerns were there. And we were not going to see, another decent year. We were all worried about freaking out about dropping 20 to 40% because we were going to have a recession. That didn't happen. And if you were in that boat and you were worrying, guess what you missed out on last year? You missed out on 23%, which is clearly well well placed in that sort of big green mountainous area. And it's actually over more toward the, it's under that kind of forgot column, right? So what my point here is that there are things you should worry about, but you should also worry about things realistically. And that's one of the things that kind of drove us a little bit, a little hesitancy. Remember we talked about 57 record closes? If you're worried, you might have sold out last year after the first record close. Well, guess what happened? You missed 56 other record closes. And anywhere in between, if you'd sold out and said, you know, that's it, I'm done, the market can't go up any higher. Remember, all the experts, they didn't predict the stock market was going to go up to 6,000 points last year. Where are all these experts? They're all geniuses, right? They all get paid mega money from Bank of America and Merrill Lynch and Morgan Stanley and all these other guys, and they weren't even within 1,000 points of where we were, which is kind of, which tells you, I guess I'm kind of undermining myself. Don't listen to experts. But my point is, look at the data. The data is 75% of the time you're going to win, right? Even better if you look at since 1950, right? That's nearly 75 years at this point. And we've been in a bull market 83% of the time. So I had, when we were eating breakfast, you guys are talking about sports a lot, right? I mean, would you get rid of a free throw or a guy who shoots from 83% from the field? It's pretty good, right? Or a coach that wins 83% of their games, right? But that's what the market is, right? In the short term, it's meant to just create a lot of, we got Italians in here? Agita, you know agita? In the short term, it gives you a lot of agita, right? It makes you worry a lot, right? But in the long term, it's all good because it's cumulative, right? So, and we'll talk a little bit about what that looks like in a couple of slides down the road. But just remember that this process is skewed to help you win. You're not going to win every time, but you're going to win a lot of the time. And if you're patient and have a solid plan, it's very, very rare that you would make a mistake unless you're emotional about it, right? So let's talk a little bit about where 2025 is going to take us. So again, listening to experts, 75% of the time, 3/4 of the time, if January is positive, we have a good year. Okay, take that with a grain of salt. It doesn't mean that, you know, it doesn't mean that we're guaranteed to have a good year if we have a good January, but more than likely, you know, the odds are in your favor. Right now, we're kind of out in the, I don't know, it's a toss-up at this point. We had a good, decent start. Now we've sold off because markets are freaking out about not getting any more interest rate cuts because, you know, inflation still remains high and you still have a lot of jobs, supposedly economic strength out there. But we'll see how that plays out as they start chipping away at some of the government spending when the new administration comes in. A really good hack and a good cheat for folks if you wish to partake in watching the daily nonsense of the markets, keep an eye on the 10-year Treasury note, okay? The higher that goes up, the worse news it is for the stock market. Why? Because up until a couple of years ago, I remember driving by my local bank, and again, maybe it's just a geeky financial thing that you know I do and I laugh, but others don't. In fact, they're probably irritated drivers that were behind me. They had these big, huge posters, right? And they said, give us $100,000 and we'll give you 0.5% for a year. I would sit there and laugh because I thought it was hilarious. And then, you know, the light would change 3 times and people were tooting at me like, get out of the way. I'm like, fine. Now I drive by that thing and you can get like 4.5%, 5% in a CD, right? So that's a real source for you to get meaningful, non-volatile returns. So when the 10-year goes up, or any fixed income stuff goes up, it basically says, look, why should I risk my money to get 10 or 11% historically in the market when I could get 5 or 6% virtually guaranteed in bonds, right? So that's one aspect of it. The other part of it is you see how the Fed has been lowering rates, but the 10-year has been going up, and what the 10-year is basically telling you, it's sort of like, it's kind of like a thermometer with a sick person. It's saying, listen, you guys haven't fixed inflation yet. We're closer to 3% than we are to 2%. And you're sitting on $36 trillion worth of debt. Why the hell would I want to lend you money? I will for a higher interest rate, and that's what they're saying. So until we see something change that dynamic, it doesn't matter what the Fed does, because the Fed is only responsible for the short end, right? Stuff that's, within a year. So it's not going to make a meaningful impact because the Fed controls the short end of the rate curve, not to get too geeky, but the market controls the long end, right? So market expectations, what you want to see is you want to start seeing that 10-year start coming down. When the Fed moves, it should come down together, because that says people are optimistic about lending money longer term at a lower rate. A lot of that with the January setup and what the 10-year is saying, a lot of that is going to be dependent on how this new administration starts. If it starts like last time, where they had, investigations and impeachments and, all kinds of nonsense, we're not going to get anywhere. We're just going to exchange one shepherd for another, and the flock is just going to continue to get fleeced, right? So what I would say simply is that it's more important how this administration starts out versus listening to the 75% predictability of the whether we have a good January or not. If they can get government spending under control, and that's what I'm excited about, this whole Doge thing. And I know you guys are saying, hey, look, Tom, we've been around long enough, we've seen it, right? I mean, they have a commission and they have these studies, and Congress people sit there and they grandstand and they blow a lot of air, and then 2 years later there's a 2,000-page report that gets buried. You guys remember the Raiders of the Lost Ark? Remember at the end of the movie when they were like, I hope they put this thing in a safe place. And they showed the guy wheeling the crate in this humongous warehouse, and nobody knew where the heck it was going to go. So that's what they would do, those kind of reports. You'd never see any government reforms as a result. Why I'm excited about this Doge thing for once is because we as Americans have an attention span like a gnat, right? And it's like we're literally on to the next thing. Because who remembers drones from 2 weeks ago? Okay. Then we had people get killed in New Orleans. Now we're all about the fires, right? So we're moving around all the time. So you think we're going to have any patience for a report that comes out 2 years later? No, we're going to be like, I don't know what these guys are doing. But what's nice about the Doge thing is Musk owns X. So the minute he catches wind of something that the government is doing that's stupid, it's made public. And we can all share our outrage with our friendly congressman that we love so much. We can call up and say, hey, Mr. Congressman, why are we giving money for squirrels to be on cocaine and, fly drones? It's a government program, right? I mean, who knows? There's a lot of weird stuff. Like Dave was saying that my daughter's done with Penn State, by the way. She's moved back to Kansas with us. She works at the Geologic Survey. She studied geology. And she works at the Geologic Survey at KU, and her job right now is, you'd think she'd be studying geology, right? Because she got hired by the university, she's getting her master's. They have her working on an aquifer board game because the government gave them money. And I'm like, what? You guys know what an aquifer is, right? Underground water? Okay. Well, that's a big thing in Kansas, and they want to educate middle schoolers about the use of the aquifer. Yeah, that's great, but is a board game the right way to do it? But some knucklehead got the grant money, and they put that in, and somebody approved it, and that's how it works. So we need to get rid of that nonsense, but I think this time it'll be different, because you will actually see the silliness that our money gets spent on and wasted on. I mean, I have zero problem with the $36 trillion if it was spent on stuff we needed. Right? Social Security, Medicare, decent infrastructure, not spending $7 billion on 4 power charging stations, that kind of nonsense. So that's what needs to happen. But if we could just corral that in real time and then focus on growing the economy, I think, that would be, in my way, a meaningful start in trying to reverse this. So in 2025, as far as equities are concerned, I'm looking for about 10%. Don't get used to the last 2 years that we've had. It's abnormal to see 20% stock price increases or stock market increases. That's about 3 times the normal rate. So you should probably get used to the fact that 7 to 10% is a more realistic number. But think about it. If you also have fixed income that's about 5%, I don't know that you want to be that heavy in the stock market, right? So Real quick, the snapshot is as we ended the year, about $3 a gallon for gas. It was ironic because when we were driving my son up to West Point, he started his freshman year. They start in the summer because they do a form of basic training. I did a thing with my team where every gas station I stopped at, we took a picture of the pump, and it literally was eerie. From Kansas City to West Point, New York, gas was like $4.96, $5.05. It was so depressing, right? We've brought it down, but I'm sure folks, because I don't want to be like that guy that says, I remember when I was, a kid and ice cream cost a nickel. No, 4 years ago, gas, you guys know, gas was not $3 a gallon, right? It was a lot cheaper. So we need to see more of that. We're going in the right direction, but don't tell me that, oh, gas is only $3 a gallon when it was jacked up to $5 and you want credit for it. When it gets down to $2, then we'll be talking. Oil is surprisingly hanging in there with all the mumbo jumbo that's going on in the Middle East and all the stuff that's going on in Ukraine and all that. It's shocking that oil has actually sat by and been around this $70 range, which is kind of amazing. Mortgages, most of you here probably own your homes, right? Who's still got a mortgage? Okay. Who's got a mortgage more than 4%? Okay. You do? Okay, well, you need to wait for rates to come down, you need to refinance. But I will tell you this, a 7% mortgage, as shocking as it may seem to a lot of people, I remember my dad built a house in the Bronx in 1978, 14% mortgage. 14. Okay, granted, it was a $125,000 house, but $125,000 was a boatload of money back in 1978, right? And so, we're closer to more historical norms with mortgages, but, still, when we've been having 3.5%, 3%, 4% mortgages for a long time, it's a shock to a lot of people. And, especially for young people, it's hard because the price of homes has gone through the roof, right? I mean, most people's homes have probably appreciated 30 to 40% on average around the country in the past 5 years. Fed funds rate was 5.25%, and we started at 2024. It just went down to 4.25, but we talked about how that only affects the shorter end. It doesn't really affect the longer end. 23.5%, the 10-year actually is now closer to 4.7. It's been moving up because inflation is still elevated, which is not a good thing as far as I'm concerned. All right, here's another PSA. You guys right now are living in probably the best time in history to be alive. It's 2025. It's the United States of America. You got all this technological stuff going on, and you're hopefully most of you are retired or on your way to being retired with assets. Okay. I don't know that outside of winning mega millions or whatever, I don't know that there's a better place that you can be, right? But yet, we still wind ourselves up and we watch CNN or Fox or whatever every day, and there's just the constant, there's either a flag flying or there's an alert or something's going on, and they're just stressing us out. I mean, these are all these go through the years. I mean, you look at this is going back like 40 years. We've been broke, we've been on the edge of this and the end of the world and this and that, and yet, we do this to ourselves voluntarily. I, magnanimously take on and carry the cross, and I watch this crap every day, right? The financial television, right? Because that's my job. You don't have to, right? Hang out with friends. First of all, how many people believe that we have 24 hours worth of news in a day? Yet we have 24-hour news cable, right? And it's the same old story. It's like, how many times can you watch those poor people in California, houses burned down? It's like, okay, yeah, I get it. There's a fire over there and it's too bad, but at the end of the day, I got to move on with my life. But then people sit there for hours and just watch, and they hear the same stuff over and over again, and they get all worked up and they get stressed out. And what happens then? And they buy leaf gutter guards, and they buy pillows, and they buy Relief Factor, right? Because that's what they want to do. They don't care about news. They care about selling you stuff. And you don't, and at this point in time, you need to be relaxing and enjoying your lives. Why do you need to, be stressed out? So some advice that's not necessarily financial, I would say try to unplug yourself from a lot of this nonsense, because all it does is artificially, the election was the worst. I mean, I'm sure, hey, you guys were in PA. I'd imagine what it was like when you turn on that TV when it was election time. Like, if you didn't want to, like, hang yourself. I mean, in Kansas, we pretty much was, there wasn't a whole lot going on in Kansas, right? There wasn't a whole lot of ads. Locals, there were some local yokels that were running ads, but we didn't get the presidential election and all that stuff. That was a non-thing. But here, I mean, I can imagine, like, so think about that. That was financial, news, economic, everything was like on hyper steroids, meaning to stress you out at a time when you really shouldn't be stressed out, is my point, right? Now, what have you done? What have you done that's right so far? Is you've got a team around you to help you, right? Don't worry about all the everyday noise and nonsense that occurs, right? Because the issue is, we've talked about it, it's meant to make you make emotional decisions. My parents used to tell us, right? Well, all of our parents probably told us this in some way, form, or another, right? They said that, look, nothing good happens after 10 o'clock when you're out of the house, right? Generally, okay? Well, nothing good happens when you watch 24-hour news. You just get stressed out. And then you feel bad, and it's like, even though your life is fine and your family's fine, knock on wood, everything else is good, we find ways to stress. So you have a team that's put a plan together for all of you. But here's my task for you guys. If you probably are doing it already, but as a reminder of what needs to be done. This is not a one-way street. You don't just come in to see Dave and the guys and just say, hey, here's my assets, help me. No, you have to come in, and you have one more job to do in retirement, is that you have to define and articulate what your goals are, okay? You don't need to learn a whole new language of finance. You may have been a successful, I don't know, engineer, doctor, whatever vocation you did to get you here, you're expert at that, great. You don't need to become a financial expert. You just need to become an expert in explaining what you need done over the course of your financial journey. And then you tell it to these guys, and then they articulate that in the form of a plan for you guys. So when you guys are stressing out and some guy is telling you on Saturday that you need to sell everything, right, and buy, I don't know, coins or something, some other strange thing, or plots on the backside of Mars, you're not going to sit there and call up and say, I need you to get me out of my investments. You're going to call up and say, Dave, am I on track to meet my goals? And your goal shouldn't be an arbitrary number. I don't know what a 10% life is like. So don't come in and say, I want to make 10%. What does that mean? Can you live well on 10%? Can you achieve your goals on 10%? But if you come in and say, listen, I need to start a business. I need to fund my grandchild's college, right? Whatever it is. I want to leave a legacy. I want to leave money to my school, whatever. Those are goals. And so then your plan is structured around those goals. So then when the market does crazy things, or you're being manipulated by the media, guess what? You just say, hey, am I still on track? Am I good? Market timing. Anybody know what market timing is? Worst possible thing you can do as a human being. And financially. I mean, I'm sure there are other things you can do that are bad, not non-financially. But the point of it is, it basically says you can predict when the market is at a top, and so you sell at that point, and then you can predict when the market hits rock bottom, and then in theory, the way it works is you sell out at the top, you wait for the market to crater, you go jump back in, you buy up again, and you do the whole ride over and over again. I don't know anyone that can do one of these things, because this is a two-step process. You need to know when to get out, you need to know when to get in, okay? I don't know anyone that can do one thing consistently, correctly, let alone both. So what happens when you do that? Remember we talked about the 57 record closes? So you would have been like, first record close. Well, that's it. Market's not going any higher than that. I think I'm going to sell out. Well, guess what happens when you hit 2 record closes, 3, 4, 5, 35? You're sitting there and you're stressing out because you got out and the market kept going up. So you missed it. And then usually what you'll do is at about 20, you'll get back in because you're like, oh, this thing keeps going up. And then you'll go up a little ways, but you missed out that, 2 to 19, right? And then you may do it again at 20, you may get out at 29, then you miss out from 30 to 57, and then you jump back in at 57, and then the market tanks. And then you're screwed because you just bought it at the 57th high. So it's not a good thing to do. So if you do nothing, you get about 10%. Stress-free, sleep well at night, 10%. If you missed the 50 worst days, you would have doubled that. But like I said, nobody can do that. And we're more apt to miss the best trading days. And guess what? We would have 2.5%. And then we would be really stressed out. So remember how I talked about that 75% of the time the market is up and we worry about that? And then we talked about 83% of the time we're in a bull market. So Benjamin Graham, who was the father of value investing, described the stock market as as two things. In the short term, it's a voting machine. Okay, it's up, it's down, we like things, we don't like things. In the long term, it's an adding machine. So look what happens in the short term. In the first year, you're all over the place. It's up, it's down. It's just kind of the way last year was, right? You know, there's a little sell-off, there's a runoff, there's a sell-off, there's a runoff. That modulation decreases the longer you stay in the market, right? So look at what happens. It continues to move up and to the right, and that's sort of that additive effect. That by the time you get to about a 10-year period or even 20, it's nigh on impossible if you're winning 75 to 80% of the time to lose money. But the reason we lose money is because we allow our emotions to drive the way we invest. So as far as 2025 is concerned, and I haven't been shocked yet, which is good, I should have told you about my pacemaker, right? I should have asked. Anywho, I'm going to tell them one last story. So, you know, Dave said, my son's at West Point, so it's hilarious, right? So it's like just to show you like how clueless the generations are these days, right? So he's 17, he calls and he's telling me what his life is like. Oh, okay. So, you know, he's going on and I'm like listening politely because, you know, that's what I do as a dad. And then he tells me, like I ask him some questions, and this is the one he blew me away with. He just says, Dad, you don't understand what it's like here. And so, you know, I pulled the phone away from my ear and gave it to my wife. I said, yeah, you talk to him for a second. Now, I get it if I'd gone to, you know, Penn State or Pitt or, you know, Arizona, whatever, and I'd never been, right? But literally, he's in the place, like literally sleeping in the same cot I slept in. He's literally wearing the same uniform and doing the same stuff. So it just goes to show you how clueless kids are. But, you know, he's getting better. He's starting to give me credit. He's starting to think, like, what is it Mark Twain said? You know, it's like when he said, when I was 16, I thought my father was the biggest idiot in the world. Now that I'm 25, I'm amazed at how much he's grown in the last 9 years. So that's an example of that. So, hey, I'm going to pick one lucky individual to read the disclosure, because I know you all... I know this is what you've been waiting for. You're like, damn, we listened to this guy for a half hour gabbing away. All I really wanted to do was read the disclosure. But anyway, I just want to thank everyone for coming out on a snowy day. Now we know why people move to Florida. Although I'm not smart either because I live in Kansas and we got like a foot of snow this weekend. So anywho, I'll be happy to answer any questions, and thank you for having me out, and I appreciate it. And you guys have a wonderful 2025. Thanks.
Which one is it?
You want number two? Number two. That doesn't mean anything, by the way.
Doesn't mean it, yeah.
Number one or number two?
Does this work?
Anybody have any questions?
What's the chances of Doge succeeding in trying to get $2 trillion out of the budget?
Well, I mean, there's a lot of waste they've identified, right? There's a lot of stuff that just because, you know, that we claim that we owe 36 trillion, that it's all allocated. I mean, it's just a question of getting it cut, right? And getting it out of the stream, right? I don't know, to be honest with you. In fairness, I'm more optimistic about it. But I don't know because there's so much that the corruption and the bureaucracy is so marbled in to Washington. There's, you know, I remember in the Army, it goes back decades. I remember in the Army being sent out in September to sit on a range and just shoot off ammunition because if the colonel turned it in, Next year, they were going to cut them that amount of resources. So there's a lot of that kind of nonsense. There's a lot of repetitiveness. Like, I don't understand, for example, why we have a National Department of Transportation, yet every state there's a PDOT and a KDOT and a this, that, and all kinds of stuff. You know, all the different security agencies, all the different police agencies. There's a lot of repetition. I think if we can get that, you know, streamlined, maybe. But the thing of it is there's just like nobody, everyone's got their pet projects, right? It's like, do you guys remember they did the base closure commission back in the 90s? And everyone was like, yeah, we got too many military bases. You know, the Russians are not a thing anymore. Peace dividend, peace. But then the minute they came to your community, everyone's like, no, you can't get rid of our fort. There's jobs here. You know, I've got relatives that work there, blah, blah, blah. So that's the problem. And that's what the government's really good at. If you look at like some of the real big, like Department of Defense is notorious, right? They'll build like, you know, the joystick for an airplane outside of Pittsburgh, and then the wing will be made in Ohio somewhere, and then whatever. So then when you go, let's get rid of this stupid plane that we don't need anymore, they're like, all of these communities rise up because they're all jobs in these communities. So I'm more hopeful, but I don't know that you can guarantee that. So sorry, it's not a strong answer, but I'm trying to be honest.
Any other questions?
Okay.
At 36 trillion, when does it become critical?
So I would think of the debt, think of it as a cash flow problem as for an individual. Think of it as a credit card balance. At what point in time can you not afford to make the minimum payments or pay any of it back down? That's when it becomes critical. At this point right now, in our case, it's going to be, will the rest of the world lose faith in our ability to service that debt? And right now you look around the world and they're in worse shape than we are.
Who do we owe money to? Who are we borrowing that money from?
We're borrowing money from China. They're investing in our funds, or a lot of like the 1%ers are putting in money. It's ironic how much of that COVID money, they said it was going to take about 5 years for those trillions of dollars to meander their way into the pockets of the richest people around the world. So that's kind of what's going on. And then we're paying them interest on top of that for things that we don't want nor need. So yeah, it's the wealthy, and it's, you know, foreign governments that want to have, you know, leverage over us.
What if you just tell China, we're not going to pay you back?
Well, we could default. And they tried to do that during COVID. Remember, they were trying to say that you guys sent us this virus, and, you know, I think 1 or 2 senators were saying you should make us pay for it, and we'll just, you know, not pay you on your bonds. But, you know, the problem with that is then you go out on the limb, and then people aren't going to, when you really do need a loan, they'll be like, well, how do we know you're not going to do us like you did to China?
Yeah.
So, yes, ma'am.
What are your thoughts on the U.S. economy if we do have tariffs with China?
So the tariff thing is interesting because depending on who you listen to, you go from like the complete dire, you know, awful, everything we have is gonna double, to somehow we're gonna, you know, end up, I don't know, controlling the Panama Canal again and owning Greenland and having a 51st state, right? I think, you know, at this point, again, and I'm not gonna say that, well, I'm a New Yorker, so I know better, but you know, I've seen people like Trump my entire life. They talk a big game. I think he tries to, you know, needle and wheedle his way into what he needs. I think that the tariffs are going to be targeted, and they're going to be used, you know, judiciously as a tool. I don't think, you know, it's just going to be punitive across the board, because he also realizes that if he tanks the economy, he's not, you know, he's not going to be in power much longer, meaning that he'll lose in the midterms, and then he won't be able to get anything done. But I think back to the debt, the debt thing that's important is that if we can also get rid of, deregulate a lot of stuff. I was talking to someone the other day, and they said that 25% of the price of a house is all like permits and inspections and mandates and this and that. I mean, think about that, 25%. We just talked about the prices of houses went up in the last 4 years, you know, 25 to 40%. Houses would have probably remained more affordable if we didn't have all that stuff. So the tariffs, long story, I think I won't say it's a ploy, but I think it's a negotiating tactic. I don't know that we're necessarily going to see, the dire consequences that some people think it's some sort of nirvana and everything's going to be perfect, and then the other people think that it's always something in the middle. Yes, sir.
When's Social Security going to belly up? We've heard for the last 30 years that it only has 5 more years to.
Yeah, it's 5 more years. So that's where I wish we'd spent some of this $36 trillion is on stuff that were meaningful. But it's a political hotcake, right? I mean, so the funny thing is they say that we need reforms, right? Well, if you talk to someone who doesn't like the potential of something good happening for us, they're going to say, oh, they're going to cut your Social Security. No, you can reform it and still keep payments the same or not higher. There's a lot of waste in the process. The fact of it is, it's the only financial type organization that actually loses money, which is amazing. Like, how do you take money in and not make something on it? I mean, there's a lot of things that can be done, but I think that'll be sort of the last shoe to drop. With Social Security is just such a third rail that the minute any politician gets anywhere near it, their career is toast. So that's the challenge. But I would urge people, and again, I don't know how many people I'm going to reach, doing these. Even if I do 1,000 of these, it's only going to be probably, maybe 10,000 people. But the fact of the matter is, it needs reforming, right? I mean, I don't know anything that the government touches that works well. I mean, honestly, look at the post office. The post office. Look at your DMV. Look at college loans. Look at health care. Okay, these are all things that the government decided to get involved in, and now what, we think they're going to get, they're going to get Social Security right or retirement right? I mean, the only thing that you could say the government maybe does right is the military, but I don't even know, like, I have nobody to compare it to. I could look at the post office, and I could look at UPS, and I could look at FedEx and see how those two run and say, wow, these guys do a much better job than the government. We don't have an alternative military that you could say, right? I mean, we just throw money into it, but there's so much corruption throughout all of these places in government, and why should Social Security be any part of it? So, but yeah, 5 more years. Well, it could be worse. So I'm Greek, right? So I have a ton of relatives in Greece. And everyone was retiring at 50. And you guys are familiar with the financial crisis that they had, the austerity. That was 2013, 2014. So I have a cousin who retired at 50. She was a physician. They promised her, the government did, 4,000 euros a month, which, is pretty good. They don't have a lot of expenses, and, 4,000 euros is pretty good. Well, when austerity hit, now mind you, she retired at 50, now she's 60. She hasn't been a practicing physician for 10 years because she's retired, right? She's not current. Guess what? The government knocks on the door. Hey, you know what? That 4,000? It's only 800 now. Deal with it. Yeah. That's what happens when you let too much government control what's going on. That's why we need to be vigilant and get in these people's, again, nicely, because you love your congressman or congresswoman, but be it nicely. Pick up the phone and say, listen, stop it. Okay? And because that's the kind of stuff the government will, because what was it Jefferson said? The government that gives you, I forget the quote again, but anyway, but it's something along the lines of beware the government that gives you everything, because it could take everything away too. So that's kind of, anyway. I don't want to bum you out on Saturday morning. You'll be bummed tonight, and it'll be like chewing the old nails. I wish you guys well, but it's going to be tough sledding tonight. Oh, yes, sir.
Bitcoin.
Yes.
Do you know how that works?
Everybody asked that question. So I'm on that boat where I don't know how it works. I mean, we talked about it last night. I think there's a lot of value to the blockchain stuff, the technology behind the scenes. But when the thing goes up to $100,000, I don't understand how it's worth $100,000 versus $50,000 versus $30,000. And then you also hear stories that some pothead gave 3 Bitcoins for 2 pizzas. Like, what is that? right? So to me, but here's the way I look at it. I'm not going to invest in it, but I also don't invest in precious metals or commodities and things like that. That's not my thing. But if you are of that persuasion and you want to be in it and you think it's interesting and well, I'm not saying you, but I'm just saying for anyone that's curious. Or if you want gold, go out and buy, 2% of your portfolio in gold. And that makes you feel better, that's great. You want to buy some Bitcoin? But I wouldn't build my entire wealth plan around Bitcoin or gold for that matter either, because when you look at something like gold, it's had a return of like 3% over the past 100 years. So that's, and then what do you do with it? Ostensibly is what? If the government collapses? Well, if the government collapses, you're better off, hoarding ammunition and rice and beans that you could trade with, because you're not going to go out into the street like a little pirate, with your bar of gold and think about that. So, anyway.
Any other?
Yes, sir.
How does your relationship with Capital A impact what they do with our individual plans?
So do you want to talk about that?
Yeah, so AE Wealth Management, which Tom is the chief market economist for, they're behind the scenes in helping us manage your portfolios. So they're the ones, part of their team, they're talking to Apple and Amazon and Google, and they're helping us with those recommendations. So we're building the plans and architecting those for you, and then they are helping us manage on the wealth side of it.
Is that an ongoing thing, or is it weekly, monthly?
Portfolios are traded really often, but they're constantly involved with the portfolios. They're actually managing them behind the scenes for us.
Thank you.
Well, for you. Great question.
Yeah, so that's a good question. So, and that's what Tom kind of mentioned. We're here to build the plans. We're here to make sure that you guys are on track and living a good retirement. They're here to make sure that the portfolio works. And so the reason we do that is because if the portfolio goes down, we now have somebody to blame, like Tom. Right, Tom?
It's a beautiful place to be.
That's it.
Never right, always guilty though.
Yeah. Any other questions before we wrap up?
Yeah. How big is AE Wealth Management? How many people you got on staff?
We've got about 1,000 folks, a little over 1,000 now, and as far as assets under management, I joined in 19, we had 4, almost 5, now we're nearly 40 billion. So we've grown tremendously, and the thing about it is we don't really have a ton of advisors. It's not like we just go out and let anybody on the platform. We have a limited amount of relationships, and we support the heck out of our advisors. I mean, your question earlier about the portfolios and things like that, we basically stock the shelves, right? I mean, think about it as a supermarket, right? We stock the shelves. These guys know what they want to cook, and they go down the aisle because you decided, I want fettuccine Alfredo tonight, right? So he's going to cook your meal for you. He's going to go down in that supermarket and he's going to find the ingredients that he needs to make that meal work for you. But you got to make sure the shelves are stocked, right? And that's what we do. We're constantly looking at inventory. We're looking at managers. We're adding, we're deleting, we're updating models to make sure that these guys have the most effective method to achieve what you need done, because I don't know what your plan is, right? The real value here for me when I talk to the advisors, they know you intimately. You guys sit down and you guys, they share your dreams, your aspirations, your goals, whatever it is that you need done, they know about, right? But I don't know what kind of portfolio, risk tolerance or anything like that you have, but I have to make sure that when they dig into everyone's individual situation, that they actually can put a plan together with the tools that we provide that makes sense to you individually. Yes, sir.
Along that line, you deal in not specific stocks, but in funds also, right? So there's the market would be for funds, for stock, for funds.
I'm sorry, I didn't understand the question.
The products you're putting on the shelf that you're looking for, are those funds that you're putting on the shelf for him to pick?
They're primarily ETFs. that we use, and then there's individual stocks as well. And we try to stay away from funds. They're not mutual funds, you mean? They're not as efficient as an ETF would be, but an ETF serves the same exchange traded fund. Oh, I meant to tell you about earlier when we were talking about, retiring and not having to learn stuff. Like, when you go to, well, I don't mean it in a bad way. But like when you go to Starbucks, for example, I don't want to learn their language. Just give me a medium coffee. I don't need this baloney, venti, blah, blah, blah. And that's kind of where I'm at. It's like, that's why I was hitting hard on the goal setting, right? It doesn't really matter what the instrument is, so long as it's achieving the goal, right? And so we leave it to us to find the most efficient way to get that exposure for you to achieve your goal. But yeah, mutual funds are sort of passé now. They don't trade. First off, they only trade once per day, and there's a lot of additional fees usually with funds that don't exist with ETFs. So you're getting something that's more flexible generally, and also you're getting something that is less costly, because a lot of stuff with funds is embedded into your performance. People say, well, I don't see a charge for my mutual fund. You don't. But if the fund without their fees return 10%, you might only see 9.5%. And that adds up over time.
Any other questions? Yeah, so, and just so we're clear, we're all fiduciaries here, so no matter if we choose an individual stock portfolio or an ETF portfolio or whatever it is for your needs, we're not incentivized to sell one thing or another. That's why we like working with AE Wealth Management. No matter what the portfolio is that fits your needs, we get paid no matter what, the same. We're not getting more because we select one fund over another, and same with Tom. So it's just what fits your needs. So if nobody has any other questions, Tom, we really appreciate you coming tonight.
Thank you.
And he did a fantastic job.
Thanks.